Hello, traders, and welcome to yet another episode. And my name is Timothy Carey. Today, I want us to discuss about the trading journal because trading journal is a very important tool when it comes to forex trading. So we begin by defining what is a trading journal, and basically, in my own terms, this is a tool whereby traders record all their trades, including details such as the dates they took the trade, the time, the market they traded, that is the asset, the entry price, the account balance, position size, the stop loss, take profit, such kind of things. And basically, this trading plan helps traders to analyze their performance, identify patterns that have been consistently profitable, and maybe those patterns that have not been consistently profitable. And this will help them improve their trading decision. So this is a trading journal that I have prepared for you, just trying to make it easy and very simple for you to be able to follow it through. So in this trading journal, this first sheet, we can rename it and call it trade log, right? That is where you are going to log in your trades. So I've just prepared it in a very simple way to help you manage your trades in terms of journaling them, so that you can be able, or it can be able to help you improve your trading decision. But before I go to show you how we use this journal, it's good to understand why am I taking time to create this journal. So there are basically 5 key reasons why each and every trader, irrespective of your trading experience, whether novice, whether experienced, you need a trading journal. And the first reason why you need a trading journal as a trader is to track performance and progress. Remember, forex trading is a business like any other business. So if you're not recording the transaction that you're doing, that is the trades that you're taking, therefore it might be difficult or challenging for you to be able to track your progress. So this journal will help you monitor your trades performance over time and keep detailed records that you can use to identify which strategies are working and which aren't working. Therefore, this will allow you to adjust your trading approach accordingly. And especially in your beginner's level, you are testing each and every strategy. So it's good to log in those trades using different strategies, so that maybe after a month's time, you're able to analyze or go through the trading journal, and you're able to filter and know which trading strategies works for you. Therefore, the second reason, this trading journal will help you improve your discipline and consistency. You realize by the fact that you are logging in all your trades, this will keep you accountable. So it will force you to follow a trading plan, adhere to risk management rules, and avoid impulsive decisions, which might lead to more consistent and disciplined trading. So remember, the trading journal, it's part of the bigger trading plan. So I had done a video sometimes back talking about a trading plan, but I'll still do a redefined or an updated version of it, basically to help you understand how to come about with a trading plan, especially for the newbies. So the third reason why you need this trading journal, it's because it will help you identify your strengths and weaknesses. When you log in your trades in this journal, it will, you are not just logging for the sake of logging. You will need to review these trades. Some traders review maybe in a month, after a month's time, that is on a monthly basis. There are others who review on a weekly basis, which I prefer actually, reviewing this journal on a weekly basis, so that you can know how the week was, and so that you can know maybe the things to rectify next week, or how to approach next week. So when you're reviewing your trades, it will help you recognize patterns in your behavior and performance. And therefore, you can identify strengths which will be now probably your profitable strategies, and weaknesses. For instance, when you talk about weaknesses, maybe some poor risk management techniques that you have been doing, or probably emotional decisions that maybe you have been going through. And by the moment that you are able to recognize your weaknesses, at least you're able to work from your weakness, and it will help you now to focus on improvement. All right. This trading journal will help you focus on improvement. If you look at this side, I have a place whereby you can make notes, basically in terms of the trade that you took. There is also a place whereby you can emotional state of mind. So when you're taking this trade, or when the trade is running, how are you managing it, or how is your state of how are your emotions? Do you find yourself feeling fearful? Are you closing trades prematurely? Because that is part of the state of mind, or what we call emotional trading. All right. So it is very critical, or it is very important to log in such kind of things, basically so that when you're evaluating this journal, at least you have some key areas that you want to focus on. All right. And my focus here, when I talk about identifying strengths and weaknesses, yes, it's good to have strength, but the key focus here are the weaknesses. So what are your weaknesses? Because your weaknesses, they're the ones that are hindering you from progressing, from seeing that the results that you want to see. And therefore, the moment you recognize your weaknesses, you're able to work on your weaknesses. You're able to improve on those weaknesses so that you can turn your weaknesses into strength. So it is very, very important. You can never recognize your weaknesses if you're not logging in your trades. So it is always advisable to log in your trades. The number 4 reason why you need this trading journal is to learn from your mistakes. We know that mistakes are inevitable in trading, but when you have a trading journal, it enables you to learn from these mistakes, because you'll be analyzing your losing trades, and therefore you can pinpoint errors in your analysis, timings, or emotions, and prevent them from being repeated. Remember, we have this common phrase that a mistake is not a mistake, but a mistake becomes a mistake if you repeat it consistently or subsequently. So if you make the first mistake, a good trader is to learn from that mistake and avoid repeating that mistake again. So it is only from your trading journal that, because you're logging those trades, you can revisit those trades, reanalyze those trades, especially the losing trades, and you'll be able to know where you made the mistake, whether the mistake was yours or it was just something normal in the market. Because again, I'm not promising you that you'll be winning all the time. There are those trades that you will scoop losses. But again, risk management is what is important. But there are also those trades that you find that they are losing trades basically because of your own mistakes. So you're able to sit down, reanalyze those trades, identify the mistakes, whether it was analysis error, or whether it was wrong timing, or whether it was because of your emotions, maybe fear, greed. And therefore, you're able to prevent them from being repeated. That's how a trader learns, or that's how you're able to improve your trading journey. The last reason why you need this trading plan is because it will help you develop a personalized trading strategy. You realize that over time, as you're journaling this trade, your journal will reveal which strategies and market conditions work best for you. And this is a big win. The moment you realize the strategy and the market conditions that works for you, you can refine and develop a trading style that suits your personality, risk tolerance, and your goals. And that will be another big win. So if you are able to develop a personalized trading strategy, therefore you are one step ahead in terms of seeing yourself become a successful trader. So I will take you through how maybe probably to log in these trades. So like you can see here, we have the number of trades, maybe the trade order number. So let's say maybe for instance on 18th September, we had a trade. We can write the date there. Then we took the time we took that trade, very important. That is 1350 hours. That is in 24 hours clock system. Then the market or the asset that you traded, here we are talking about maybe probably we traded GBP USD. So when we trade this GBP USD, let's say maybe for instance our target price is 1.23456, right? So and that is when we took the trade. So our account balance when we are taking the trade was, let's say, $1,000. So the position size that we used to take the trade, let's say for instance we used 0.10. All right. Let's maybe probably used let's even use one. All right. So then what's the stop loss in terms of pips? So here my stop loss is in terms of pips. So you can maybe probably have a 20 pip stop loss and take profit maybe 80 pips. So if you look at this risk to this, the stop loss and the take profit will give you the risk to reward ratio. So here the risk to reward ratio is 1:4, right? 1:4. So you are risking $1 to make $4, which is actually a good thing. Then you want to write in terms of, you want to log also in terms of your sentiments. Let's say maybe probably the technical analysis. All right. Let's say maybe your technical analysis tells you maybe probably it's a sell. All right. So maybe it's a sell. Then that is after doing, you're taking a sell position. That is after doing the technical analysis. Then sometimes it's good also to look at what the fundamentals are telling you, especially maybe when we have some fundamentals. So maybe fundamentally, we are also looking at probably a sell position. So fundamental, it's not really necessary for you to record all the time. You can always record it when we have some, maybe when you are taking trades that during fundamental or during the economic releases, you can maybe probably write it there. Then you want to look at the sentimental analysis, and sentimental analysis, this is whereby probably you are looking things to do with the currency strength meter. What are they saying? Maybe probably you are looking at the court report to look at the number of buyers versus the number of sellers. So that is what builds up in your sentimental. And then now your execution. So your execution needs to rhyme or to go hand in hand with your technicals, your fundamental, and your sentimental analysis. So the technical analysis tells you it's a sell. The sentimental analysis tells you it's a sell. And probably if you're taking during the news event, the economic news event, maybe it's telling you it's a sell, depending on how the data will come out. And therefore your execution will definitely be a sell. All right. So when you look at it from this particular angle now, here you can still have your starting account balance, $1,000. You have your closed position profit and loss, so that is $58. Maybe you made 58.05 out of this trade, and now your account balance increases. So you have $1,058.05. All right. So here you can have your exit price where you exited, maybe probably took this trade here and you exited from this particular point. Remember, this is just an example. These are not just exact figures. All right. So then the closed position, you can have it closed position P&L, so you can still have it here. That is a $58.05. And then you look at your account change, all right, in terms of percentage. So for me, when I'm trading, I basically like looking at it in terms of, not in terms of really dollars, but in terms of the percentage change. Because if you look at it in terms of dollars, what might happen is you might end up trading more, all right? Or you might end up having what you call greed. But if you look at it in terms of percentage change, you are able to appreciate even that little effort that you are making. Let's say maybe, for instance, you have a $20 account and you make $2 from that account. Do you know that is 20% growth? So if you look at it that way, you're able to appreciate that you have done enough for that day, and therefore you are willing to wait even until the next day so that you can begin continue trading the next day. But if you look at it in terms of monetary value, $2 from a $20 account, you might feel that you have not yet done enough. So what might happen is you might continue trading. Maybe you want to achieve $10, or maybe you want to double that account. And what might happen is some psychological mistakes that we say over trading, and over trading will actually even lead to more losses. So once you take that trade, it's also good to take some notes. So maybe probably it was a good entry, well-managed entry. Probably you can say maybe the strategy that you used. So maybe I used 5 minutes, 5 minutes bearish order block, all right? 5 minutes bearish order block, all right? So there you have some notes. Then what was your emotional state of mind, all right, when you took the trade and when the trade was running? So is it calm and focused, or maybe probably you are fearful, you are tensing when the trade was running? So this will help you now to be able to know which psychological mistakes that you basically make that hinder you from progressing or from seeing the results. So it is very important to have it logged in there, and this will basically help you so much as a trader in terms of trying to fine-tune everything, or trying to add everything all together in terms of trying to see profitability. So this is the simple trading journal that I have created, and therefore you can be able to use it. All right, you can be able to use it in terms of journaling your trades. And like I've said, the 5 reasons why we journal is to track performance and progress, to improve your discipline and consistency, to identify your strengths and weaknesses, to help you learn from your mistakes, and it will also help you develop a personalized trading strategy. So that's it for today. In case you have any questions in terms of how to use this trading journal, please don't hesitate to comment or to put in a comment, and I'll be there to respond to you. So thank you so much, and have a wonderful time.